short term, I'm calling for 3,000 on gold pre-bust. So if the bust starts sometime in the first half of next year, before we get to that, I think gold can run to 3,000. So once it breaks above its old highs, I think it can run pretty fast.
Yeah.
I'm calling for 60 to go to silver to go to 60 in that time frame. And then the bust will probably take them both back. Certainly could come back to these levels. Maybe not all the way, maybe all the way. But and then once you get through the bust, I think it's a huge, huge cycle for gold and silver and all commodities.
Yeah.
And so I'm calling for gold by the end of the decade at 20,000. Silver at the end of the decade, $400 or $500.
David Hunter, a contrarian macro strategist with 49 years of experience in the financial markets, has what many will consider shocking and even insane predictions for the equities and commodities markets and overall global economy, both in the short and long term. According to the renowned investor and analyst, we are currently in the beginning stages of a short-term melt-up that he believes would take the S&P 500 to 6,000 or 7,000 gold to $3,000 and silver to $60. Hunter believes this melt-up will be caused by FOMO as investors rush into the markets, especially when the Federal Reserve finally signals interest rate cuts next year. The pressure of money managers and all other categories of investors trying to get back into the markets will put so much pressure on the markets that prices will skyrocket, moving the S&P from its current 4,450 points to 6,000 or 7,000. Hunter believes some of those massive gains will spill into precious metals, taking gold to a new all-time high of $3,000 and silver to $60 per ounce. But like all good things, the melt-up will not last long, the macro strategist adds. As the melt-up reaches more advanced stages in the coming months, Hunter says there will be more signs of the global economy, starting from the banking sector, buckling under the pressure of all the unchecked money creation. The result of this, Hunter adds, will be a global deflationary bust that would be accompanied by a financial crisis of historical proportions. Hunter says the bust will have the same timeline as a recession but will resemble more of a depression in intensity, and he is predicting that it could happen within the next 15 months. Hunter also compares the bust to the 2008 global financial crisis. The macro strategist believes that's when the bust should have happened, but central banks came to the rescue by pumping trillions of dollars into the system. We've been able to kick the can so far down the road, but we can only pump as much trillions of dollars into the system without getting some very grave consequences. Hunter's predictions for commodities and the overall global economy is in three parts. To begin with, he's predicting a short-term market melt-up sometime next year, when the Fed finally signals that it's done with this tightening cycle. Hunter believes this melt-up will lead to the next phase, which will be a global financial bust. A gloomy phase, the macro strategist says, will bring down prices of all assets, including precious metals. The next phase, a most bullish phase for metals investors, will be a commodity supercycle that could see gold trading at $20,000 per coin and silver $500. Hunter lays it all out during a recent interview with Wall Street Silver. He gives a timeline for these events, their impact on metals prices, and how you can immediately begin to prepare for what's coming. Please watch, share, and like this video as we bring you clips from the interview. Also, ensure you subscribe to the channel and turn on post notifications so you never miss any of our future uploads. Thanks and enjoy the video.
Yeah, I don't think it's a depression. I think I call it a global bust. We're in tough shape, but Europe's even in worse shape. China's in rough shape, hasn't been in this kind of place for a long time. The rest of the world's really hurting. So we're not in great shape, and as we are seeing, our deficits are growing ever bigger. Our debt is through the roof, and our cost of servicing that debt is beyond anything we can really handle. So there are some big problems out there. I think it will lead to what I have been calling potentially the biggest financial crisis in history, which would mean bigger than 2008-9, and a global bust, which would mean something worse than 2008-9, but not a depression because it would happen more on the order of the time frame of 2008-9. So, something that 12 to 18 months, right. Not stretched out over a decade like the Great Depression. So, but it'll be plenty bad. It'll be plenty painful. I think we'll see an awful lot of major financial failures, bank failures around the world. Probably more of them overseas this time. In 2008-9, it was really centered here. I think, Europe and certainly Asia are both potential problems. So we could see a big bank or two fail here just because of the linkage to other banks around the world. And we're a small world now; everything's linked.
Mhm.
But more, our banks are better capitalized, certainly better than 2008-9. So not as bad there. Canada, Australia, I think will have some problems, but before we get there, I think we have one more blow off to go. And by the way, that bust is a deflationary bust.
Right.
So while worry right now is inflation, everybody's focused on inflation. I believe ultimately the central banks are going to stay the party too long on the tight side, create a big policy error, and it will lead to the opposite, deflation. A
And
short bout, not something that'll last for years,
Mhm.
but for a 12-month period, it could be pretty rough. Just to comment on the debt servicing,
Right.
I think that $2 trillion in debt service cost is probably going to prove very conservative, because of what I think we'll see in the global bust. I think, as I said, it's a short-lived deflationary bust,
Mhm.
but I think it's going to take something on the order of 20 trillion in new QE or expansion of the Fed balance sheet. So from 8 trillion now up to something like 30 trillion, and every central bank doing proportionally similar. It's going to take that and fiscal stimulus that will match that. So we'll be monetizing debt like we've seen in the past, but on magnitudes we've never seen. So the 300 trillion in global debt today could grow to something like 450 to 500 trillion by the end of the decade. And that money that gets pumped in say 2024, by the time we get to 2026-7, we're moving towards double-digit interest rates. And by the end of the decade, I think we'll be looking at 20% interest rates here in the U.S.
Wow.
Figure out the math. If debt grows to what I'm saying, and interest rates go there, there's no equation that can solve it and come up with anything that's even livable. It'll eat up our entire budget and then some.
Wow.
Where do you find the funds to fund the military? Where do you find the funds to fund Social Security, Medicare, and Medicaid, and unemployment, and the welfare programs, etc.? So it's a pretty dire situation we're running into.
For David Hunter, who currently serves as the chief macro strategist at Contrarian Macro Advisors, precious metals investors can look forward to two massive rallies within the next 7 years. The first, a smaller one, Hunter believes could begin anytime between the end of the year and early 2024. But the epic rally of historic proportions that Hunter is really looking forward to is the one he believes will occur between 2025 and 2030. According to the macro strategist, this supercycle will be prompted by central banks printing even more money than they did during the 2008 global financial crisis. Hunter predicts that the Fed's balance sheet, for example, could grow to as much as $30 trillion by the end of 2025. Here's how he believes that would begin a commodity cycle of never-before-seen proportions.
Right.
That's something that I think by the 2030s we could see basically a financial collapse in the world, because this is going to be not just the U.S., it's going to be around the globe. Interest rates and inflation are going to go sky high, and there's really a time where, just like, let's look at the California forest fires. If you have fires and you have no water, and you say, well, I'm gonna pump gas on it because it's the only fluid I have. That's what the Fed's going to be doing,
Wow.
what the central banks are going to be doing, and it just creates more inflation. At some point, they have to shut it off because they finally realize that more money creates more inflation, and we can't win this game, can't win this race. So there comes a time late this decade where I think we're going to lose the Fed as a source of any funding, any monetization of debt. We're going to lose our access to debt, because who's going to want, when they look at the fiscal situation, they're going to say, how can they service that?
Yeah.
So once you shut off the pipe, the pump, and once you shut off the fiscal, you have to live within what you have, and we're not going to be able to balance that equation. So, there's something between now and the 30s that is very investable. But just understand that's where I think we're headed. And this is something that's been building over decades. It's really, I call it the end of a super cycle that started, after the Great Depression. And so it's a 80, 90 year super cycle. And at the end, you get to these extremes because the excesses grow to levels that you can't possibly manage. And that's, I think we're in that final decade of that. As for it's, that kind of a scenario for gold and silver, I think it's a very bullish story for, between now, right now, I think we're very close to a big reversal in gold and silver right here. And then, through the decade, such that I'm calling for, well, short term, I'm calling for 3,000 on gold pre-bust. So if the bust starts sometime in the first half of next year, before we get to that, I think gold can run to 3,000. So once it breaks above its old highs, I think it can run pretty fast.
Yeah.
I'm calling for 60 to go to silver to go to 60 in that time frame. And then the bust will probably take them both back. Certainly could come back to these levels. Maybe not all the way, maybe all the way. But and then once you get through the bust, I think it's a huge, huge cycle for gold and silver and all commodities.
Yeah.
And so I'm calling for gold by the end of the decade at 20,000. Silver at the end of the decade, $400 or $500. Oil at the end of the decade, 500. So it'll be a huge commodity inflation cycle. I think what we have very near term is a melt up coming, which means we could see S&P 6,000 or 7,000, in the next few months, as crazy as that sounds, because I think central banks around the world are going to begin to talk about the end of tightening. You just saw it with the ECB today. They're all talking higher for longer, but they're saying we may be at the level where we just hold at these levels. So, the Fed's starting to talk that way. The ECB is starting to talk that way. China's certainly at a point where they need to figure out some kind of a stimulus because their country, their economy is going south in a hurry. So we may be at a point where investors will see that the tightening cycle is ending and latch onto that and take the ball and run with it.
A commodity supercycle of epic proportions. That's what Hunter is predicting for precious metals like gold and silver and top commodities like crude oil. But not before we get a complete financial reset when central banks finally realize that pumping more money into the economy is like throwing some more fuel in a raging fire. Let us know what you think about the macro strategist predictions in the comments section below. Please share your comments, thoughts, and observations. Also, ensure you subscribe to the channel, turn on post notifications, and smash the like button for more videos on gold, silver, and other precious metals. Thanks for watching.